So most people see life insurance as an expense, and that's the reason why they stay broke. But the people who understand money, the ones building real wealth, they know it as a foundational asset. It doesn't matter if your budget is $25 or $250. There is a policy that can help you secure your future. What's going on? My name is Kevin. I want to welcome you back to Securing Life. And if you're serious about building wealth, protecting your income, and creating a financial legacy that outlives you, then you're in the right place. Today, we're going to be breaking down life insurance. I'm talking about insurance that builds cash value, replaces your income, and lets you leave a tax-free inheritance. Life insurance has always been a wealth strategy, not just a safety net. Do you think that the wealthy buy life insurance because they're scared? Not at all. They buy it because it guarantees wealth transfer, tax benefits. It's chess, not checkers. It's income replacement. It's a debt eraser. It's tax-free money that you can leave to your family when they need it most. Life insurance is not just about protection, it's a wealth strategy. But here's the disconnect. People struggling financially are often the ones avoiding life insurance the most. Then when the tragedy hits, the family is forced to set up a GoFundMe account just to bury their loved ones. That is not wealth, that is survival. And survival mode, that keeps you broke. The average funeral is $6,000. If you add on credit card debt, mortgage, car notes, loss of the income, and maybe college for the kids, you're staring down at six-figure problems. But the right life insurance policy, that problem disappears just like that. So let's talk about term life. If you're just getting started, term life is your best friend, and it's the most affordable way to buy peace of mind. A healthy 30-year-old, you can lock in $500,000 of coverage, let's say around $25 a month. That's pretty much your Netflix, coffee, snack budget combined. One policy, $500,000 in protection, that's done. Term is like renting. You get coverage for 10, 20, or 30 years of coverage. Here are two myths that I hear all the time. It's too expensive. That is a lie. $25 a month is not expensive. That is a choice. Need it because I'm single. That is another lie. If someone co-signed your loans or would be stuck with burial costs, they need protection too. Here's a pro tip. Buy it young, lock in the rate, and build from there. Next, let's talk about whole life. Your legacy plus your asset plus leverage. Like term, whole life builds cash value. It's like owning real estate. The longer you hold it, the more equity you build. Whole life might cost $300 a month or less versus $25, but what you're building is an asset, not just a policy. The benefits is tax-free cash value growth, permanent coverage, and market-proof growth. Whole life is for you if you want to leave a legacy. You need access to capital while you're alive. If you want guaranteed tax advantage growth. So don't listen to people who say it's a scam. It's only a bad deal for people who don't understand how to use whole life insurance. Next, we're going to be talking about universal life. If your income isn't predictable, or if you're a small business owner, freelancer, entrepreneur, commission-based, then universal life might be your power play. There are two types that you should know about. You have the index universal life that tracks the market like the S&P 500 with the upside potential for zero market risk. If the market drops, you don't lose your money. Next, we have your guaranteed universal life, permanent protection with lower premiums and less focus on cash value. The best part, payment flexibility. You can scale up or down based on your season. Universal life is ideal if you're self-employed or have seasonal income. You want long-term growth tied to market performance, or you need permanent coverage without whole life costs. So which one is right for you? Ask yourself these questions. Want simple protection or asset building? What's my realistic monthly budget? Who will be financially affected if I pass away? And here is a quick cheat sheet. If your goal is high coverage, low cost, then you're looking at term life. If you're looking for legacy plus the cash value, you will want a whole life. If you're looking for flexibility plus the market exposure, then you're looking at the index universal life. If you're looking for permanent low maintenance type of a policy, then you're looking at the guaranteed universal life. And remember, these are just ranges. Your health, your age, and goals have a number. With this chart, it gives you a starting line. The cost of waiting. Waiting is the most expensive thing that you can do when it comes to life insurance. That $25 a month policy at age 30 becomes $100 a month at 45. And if your health changes, you might not even qualify. So waiting costs you money, leverage, and opportunity. If your income is valuable today, protect it today, not later, not someday. Wealth is built on decisions and not delays. I don't just talk about this stuff, I live it and I teach it because too many people are losing the game by default. And if you're ready to secure your income, protect your people, and build something that outlives you, then what I want you to do is to click the link below in the description for a free strategy call. And remember, we're not living to survive, we're living to wealth, not to poverty. I want to thank you for watching this episode of Secure in Life. Until next time, peace.